Hey everybody, Chris Englebert with Englebert Financial Advisors in Allentown, Pennsylvania with the weekly QCast update. It is the first week in January of the new year 2022. And as always, the first week of the month, we give you our strategy update, and things have been happening here in the last week. So one of the things that we always do is we start out with a cartoon. This talks about what the Fed is doing, and the Fed has been making a lot of rumbling sounds, and it's rolling over into the financial market. So as you can see by my next chart, so last year the S&P 500 closed out December with a new all-time high. There was only 3 corrections of 5% in 2021, and the first trading day of this week, we saw the S&P 500 make a new all-time high, and then guess what? We started to see a vicious rollover in the large cap tech stocks. Now, that happened in early December where we saw the large cap tech stocks sell down. And why are they selling down? Well, there are some stretched valuations. And if you go back and look at our market outlook for 2022, we talk about how the fact is that a lot of these large cap tech stocks have gotten extremely rich in their valuations. So the other side of that is that whenever interest rates go up, there's a correlation between rising interest rates and large cap tech stocks not doing well. And that's been what's happening. So you can see on the left side of the chart, and again, I'm going to keep beating this chart and showing it to you over and over and over again, because last year the S&P 500 rallied on the backs of Apple, Microsoft, Facebook, Google, Netflix, and a little bit of Amazon. And now guess what? We're seeing a lot of those major stocks begin to roll over. And you can see by the arrow on this chart over to the right that we saw a pretty good drop on the Tuesday, Wednesday trading sessions as the NASDAQ really had a kind of a nasty, vicious pullback. Now, we think that sets the tone for the rest of the year. However, short term, I would not be surprised to see large cap growth, i.e. large cap tech rally, because it has been beaten down substantially in the last 2 to 3 months. Some of the stocks out there, and again, this is not a recommendation to buy or sell these stocks, but some of the stocks out there like Coin, Teladoc, Roku, Zoom, Twilio, Shopify have really seen some pretty sharp sell-offs as the extended large cap tech area has really taken a beating. Interestingly enough, again, going back to our outlook for 2022, we mentioned the small mid-cap area. That is holding up relatively well so far. And again, we think that's the place to be in 2022. Now, let's go on to interest rates and what's been happening there. Last year, the 10-year Treasury finished the month of December at 1.5%, right in the middle of the trading range. Well, guess what? With those hawkish Fed comments that we've had this week, where the Fed said, hey, we're going to start to raise interest rates maybe sooner than expected on the short end of the scale. And oh, by the way, we're probably going to stop buying as many bonds on a monthly basis. That was kind of a 1-2 punch. And you can see over on the right-hand side, we've seen the 10-year Treasury float back up to 1.7%. Now, again, my market outlook for 2022 when it comes to interest rates is that we think this is kind of the top of the range as far as interest rates for the year. And we are beginning to take advantage of that and extending duration out for clients, which means getting out of money market funds and buying some longer term bonds. The reason being is that we think the bond market stays rather muted. Now, I know a lot of people are saying, wow, there's inflation out there. And as inflation really heats up, you got to see interest rates go up. We think the other side of the coin out there, like we've said before, is there's a lot of international demand for the 10-year Treasury, and there's a lot of cash sitting on the sidelines looking to be put to work at these levels. So we think this probably is an attractive opportunity. And again, we've been extending duration out for our clients. So what does this all mean for our market update for the first week in January? Again, the large cap tech rally that we saw at the end of December was brief. The first week, we've seen a reversal of that and a very aggressive sell-off. And we actually are now at levels where I would not be surprised to see some kind of bounce. The 10-year Treasury yield spiked up because of those hawkish Fed comments. We think that that's actually an attractive area to be right now. But again, one of the other things that's very interesting is the correlation between stocks and bonds. Typically, if the stock market goes down, there's something called the fear trade where the bond market goes up, where people sell stocks and buy bonds. If you want to see an extreme example of that, go back to March of 2020, where when the stock market rolled over 35% in 2.5 weeks, we saw the yield on the 10-year Treasury collapse down to 0.5%. Well, now something very interesting is happening is as yields rise, which means bond prices are coming down, we're actually seeing the stock market sell off. This correlation between stocks and bonds, both acting negatively at the same time, is rather unusual, but we also think that that could be one of the themes for 2020 as well. So it's something you got to take a look at. So that's our first weekly update for January 2022. Tune in next week when we give you some ideas on why your financial advisor should give his cell phone number for you. And again, as always, if you want to see my fresh video content, download my app by texting Chris E to 36260. You can download my app. I've got a lot of fresh videos on there. We'll talk to you soon. Have a great week.